Hey, good morning, everyone. Good morning. Good morning. All right. Today is, what's today's date? I'm like, so January 14, 2022, guys, 2022. Uh, Let me see here. All right, guys, we have a lot to talk about today. So, a lot to talk about, a lot to talk about. So, good morning. Good morning. So, markets are moving. Markets are moving. There is a little bit of a tech wreck going down. We caught this. We saw this coming. Hope you guys are okay out there. But let me get settled here. All right, guys. So, wow. Amazing, amazing day today. All right, TikTok, what's up? What's up? We're going live all over the place here. All right, so today, things you have to worry about, and I want you to listen into this. If you're locking in right now, try to listen over and over again because I'm going to give you a lot of knowledge here. I mean, a lot of knowledge. You know, we expect these kind of whipsaw actions occurring, right? So right now, the Dow's down 219 points, Nasdaq is 100 points, S&P is down $27. We're about to go lower, guys. I hate to say this to you. We're about to go lower. So let's dive in. What here to anticipate? So the banks announced earnings today, all right, and it doesn't look like the announcement came out. Jamie Dimon's coming out. I'm trying to figure out what he was saying, and there's a couple things here in the news media that I've noticed here. So right now, what we're gonna do, we're gonna go into newsworthy events and how to really put the pieces together to see how we can benefit from today from either up market or down market. Right now, if you're new to this show, I'm going to show you exactly what to look for. So we're going to cover the news first. Secondly, see if how the news is going to react to certain plays that we see. We're going to see the overall market conditions, and then we're going to pick to see how we can benefit and make a little maybe coin today and making some money. And also, you want to protect yourself, especially if you're some long-term positions. Okay. With that being said, before we start, make sure, guys, that before we start, I want you guys to do me a favor and press that subscribe and like to this show or follow whatever platform you're on. It'll just help a lot if you can do that right now before we start. But here it is. I'm going to start diving in. So Barron's right now, as far as the Barron's news media that I'm looking at, pretty simple here. There's nothing really, Tesla stock is down because I don't know. Tesla stock, I mean, it's a good company. Why is it down? Here's the reason why it's down. Something about the website, kind of they're reading into it. Tesla removes 2022 from Cybertruck webpage, likely the issue for the stock today. It just removes some language from the website, so it might cause further delays. That's how they read it. If we break it down, don't read too much into it. Keep the process simple. Soaring prices might go up. Says that home builders are still good. Well, don't always believe the hype. Always watch the price action. If anything, I learned from 2008 of trading in 2001, and this reminds me of 2001, guys. But 2008, 2007. If you were trading during that time, I know most of you on TikTok weren't, but basically in 2005, 6, 7, they were saying buy the home builders, buy the home builders, buy the home builders. Who was a guy from Countrywide that was saying, yeah, keep buying, and he was selling. So again, watch price action. At that moment of time, that's when I realized it doesn't matter what people say on TV. Watch the price action, watch levels. Even more so than the triangles, guys. Even more so. I know all about the techno. I know I know all the wedges. I've studied that for years. But I realized one thing is a little bit more important is levels. And the reason why, guys, is for this reason, guys. And the triangles do work, but the levels, it's 80 something percent of all trading done is done on algos and AI. So once you understand that these guys are working on a program and they're selling at levels, they know about the triangles, But if you're working within the triangle, the thing about it is that you're missing out on the trading of the inside of that triangle, right? And you're waiting for that breakout, and they know about the triangle. So sometimes those triangles work, sometimes they don't. But if they need liquidity, they'll take it up there. Again, these are algos. They know, and they'll liquidate there, and then you're stuck. Right. And that's why that triangle didn't work out. Oh my God, it didn't work out. Yeah, exactly. But I prefer levels a little bit better. And that's what we're going to cover. That's what I'm coming. I'm going to throw up everything I know of years of experience and also reading the tape and throw everything at you on those Sunday night courses. So get ready, guys. It's going to be a lot, but I promise you in 2-3 months, you're going to be way better, way better. But let's dive in here. So GE wrote a letter to the Post, but that's not what I was looking at. Intel jump. Intel stock is jumped because his name Micron exec as new. Okay, so that's fine. Worried about inflation. So this is what I wanted to cover and wanted to put the pieces together. Okay, so right now, Treasury saving bonds paying a 7.1% interest rate, right? So they increased the interest rate on the Treasury series, right? And this is out. This is in Barron's today. So again, you're getting and this is to battle CPI, right? 6.8. So I mean, pretty interesting read. And so I'm wondering why this is happening, right? And then we're gonna put the pieces together of the banks. They haven't raised interest rates yet, and we know on 25th and the 26th. That's when Powell's going to come out and kind of laid out the plan. There's been some talk about, going hard in March, right? So again, I don't think the market is reacting to this. Backlogs in the IRS, but and $100 of oil rising up, right? Bitcoin closes weight, but Bitcoin's dragging. Obviously, guys, Bitcoin, if you don't see the correlation between Bitcoin and the interest rates in the Fed, there is a correlation there. Why? I don't know, but it's pretty interesting. We can dive in. Zynga went up because it's a buyout, right? They're being bought out by Take-Two Interactive. So that's what we got on the news front. Nothing really major here. CNBC, the Dow is still rolling down. Cool. Let's get rid of that guy. We don't need that guy. And also, here's the thing. Supreme Court vaccine mandates ruling. So this is why the vaccine stocks are going down. But we're going to dive into everything right now. And let's go in, find out. So that's the newsworthy events that we have going on for today. And also, guys, I got to tell you that Monday's a holiday. So let's dive in. Let's see what's cooking right now. I'm over here. Let's see what's cooking. So Tesla stock. Okay, we got that covered. Beyond charts, we're there. All right, cool. We're gonna dive in. So now what are we gonna do? We're gonna be looking at again. We're looking at the overall market. Okay, so you have to do this every day. If you know, I do this every day the same way. Nothing changes. So we're going to be looking at the overall markets, guys. So here's the overall market. We want to watch to see where the levels were at. So if you guys got into that trade yesterday, because I laid it out beautifully on yesterday for you guys, like I told you, XPX, what to look for, how to use the VIX, and if you did work out on that, do me a favor, press a like, subscribe, leave me a comment, let me know what you got. Yes, VIX is way up. Let me know how much money you made in the comments. I know James, let me know. I know James made some money yesterday. I know a lot of you made some money. I got some texts, but let me know in the comments. Let me know that we set up that XPX trade beautifully for yesterday. Now, there was a couple of trades that we did set up also to the upside, and those didn't work out. But again, it's all about net money management, right? And I want to point this out. Yesterday, and I'm going to get into it. It's all about money management. A lot of people I've noticed out there, they talk about, oh yeah, you win all the time. It's not me, but they talk about you're right. You can't win all the time, but you manage your account as a whole, right? And basically, what do? Well, you go out there. I got some calls on Google. Okay. I saw that the whole market was turning. I got out, took a loss there, and I hedged myself, right, with the XPX. I added a loss from the Google trade, added to the XPX put positions that I got into it, and then we made up for that. So that's net. I don't focus on the loss, right? If you focus on the loss, the law of attraction, you're going to attract more losses in your life. And, you got to make sure where your mind is at, guys, because we need this. Where you focus on is where you're going to expand, right? So you need hyper focus, especially in these markets. What I'm noticing in these markets, guys, this reminds me of 2001, and I expect that we're going to have a lot of whipsaw action. Oh yeah, there you go. Good job. So, so basically, what we saw whipsaw action, and what I told you today, and I said we're probably going to see a drop and up, drop up. These violent moves in the market, right? Or not violent moves. We're going to see these whipsaw moves. And it's going to, if you're not watching this show, you're going to be watching thinking, oh, we're not that bad. But what they're doing, they're gradually taking it down, right? Gradually taking it down. And before you know it, you're probably going to be low. That's what I'm noticing that's happening right now. I hope I'm wrong, but that's what I'm noticing. So don't get caught in that. If you're in this thing long term, you just want to be a little bit careful. The best way to trade right now, this is a fast market, is to do pair trades. You want to pair trade. And what I mean by that is basically get into a call, get into a put, right? And but pretty simple yesterday. Yesterday when I said it's 47.50 was really, really hard, right? 47.50, 47.05 was going to be the accelerator. You can watch the tape from yesterday, and that's exactly what I said. But right now, we're at the 50-day moving average on the dailies. This is exactly where we like to trade. Remember, I say all paths lead back to the 50. The market doesn't like staying at the 50-day moving average very long. Where are we going to head today? Well, pretty simple. We're probably going to go to 45, 83, 81, somewhere in there. And if it gets bought there, because that's where they bought it last time, but that's probably where we're going to head. Okay, pretty simple. It's a long day weekend. And here's the deal, guys. It's a long day week, a 4-day weekend. Do you want to be holding a position over a long-term weekend? Right. So today's going to reveal all. I'm not a crystal ball, but I'm going to say no, right? Because anything can happen. But we're probably going to work our way lower towards that. Nasdaq, again, tech wreck. Again, so interest rates the rates aren't up, but let's add this together. If the rates go up, right, that means that the margin requirements are going to shrink on all these companies that are going to own a lot of debt. The cost of money and borrowing money is going to be high. Now, also, let's think about this. The banks also, what you're not failing to see is that, or what we don't see, is that at some moment, how are the default rates now on the credit cards, right? I told you about the other company, a firm, right, with 53% of people who start off, they apply within the first month, they default. So now that money becomes more expensive and the default rates will probably increase. So that's something and that's down the line. That's in the future. That's not happening now. Remember, we don't really talk about the past when the markets, we talk about the future. And maybe that's why the banks are having a reaction. The Russell's probably going to go a little lower. So again, I told you these low. The cliff, there's a big cliff on the Russell. And it's right at that 2108. Let's say 2100. Okay, there's a big cliff right there. Okay, so just watch that. And again, are we going to get there today? I don't know. Anything is possible. And let's see. All right, so now let's go in. So right now we're at the 50. The VIX is probably, as far as the Nasdaq, we can probably head lower. Russell looks like it's probably going to go lower. We're going to watch those levels right there, because if we break that, we're probably going to break. Okay. And again, watch that level of 40-something 81. Now, as far as where are the futures? Let me see. Futures are ES11. All right, we got that. Futures. Futures. All right, so here we are. Now, on the futures, I gave you the little tip here on the futures. Remember, you want to go to that 4 a.m. hour. 4 a.m. hour. I already did it for you. This is 2. This is 4. This is 4. Right there, and you're going to draw the line of the top range that we went there on that candlestick, which is 46.69. If we stay below that more likely we're going to have a down day. As you can see, the futures are working its way lower from that level 4 a.m. That's a tip. Write that down. You want to go there. Now, if you want to go into the Nasdaq, and I did that for you as well, the 4 a.m. hour is right there. It's sitting at that 15,535. We're working our way lower. If by any chance we go above that, then more than likely the market is going to get a little bit of a reaction, okay? We're not going to go straight down, guys. So it's not going to be like doom and gloom. We're going straight down. It's too much money for that. They're going to lose way too much money for that to happen. Usually how it happens is they'll sell off a little bit, write it up here, and you're going to see the news media is, oh, buy this is a bargain, blah, blah, blah. It goes up, and then it sells off a little bit, and then you're going to see the news media go up, blah, 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 go up, and then you sell off a little bit, and a little before you know it, you're way down here. That's how these things work. And then usually the last leg, and you'll be at the 200-day moving average. The last leg is usually when the panic sell sells in, and then we drop pretty hard. So again, I'm been through this already. There's a lot of newbies out here, a lot of young guys have not been through a bear market. And they think it's a bear market. I love bear markets. I love bear markets. All right, I study them. I love them. You'll watch me. You're gonna enjoy these things. So what do we got? VIX is way up. All right. Good morning, GADH. Good morning. Good morning, guys. Yeah, VIX is way up. I'm seeing it there. Yeah, I made five. Oh yeah, using 1200 beautifully. Yeah, James, that was amazing trade right there. And if we watch those trades, those are way up. Let me see there. So that's all right. Cool. So let's see. All right. So let's go in here and let's dive in as far as like where are the XPXs right now. So if the E-minis right now at 46.19 on the XPX, that's going to put me right now at 46.29. So right in there, guys, we're going to open up right in 46.29. So if you know, look at this is the hourlies, right? We're at the 50. Right, 47.50 was hard. I gave you this trade yesterday. I also told you, look at the VIX. The VIX yesterday, the area that we were looking for was right there at that 1873. And then there was 1873. I gave you that level. It hit, boing, bing. This morning we got that one. That was another bing, right? And then we're up here. So what is the VIX? The VIX is a measurement of fear. So again, this is Friday, Thursday, Wednesday, Tuesday, Monday. Monday, Tuesday, Wednesday, fear went down. What happened yesterday? Fear went up. And when those levels hit, it told me that there was more put buying, more fear entering into the market. And now fear is going back into, look at the MACDs. They're heading higher. So if we look at the weekly range, we are heading now above. So this was last week. This was Christmas, and this is the week before Christmas. Look where we're heading to now. We're heading up into these volatile areas of 27 right in there. So I expect that we're probably going to sell off into the weekend. All right. As far as the Treasury notes, the Treasury note is above above 1.70. Remember, we broke out. It's pulling back. More likely, I expect this to go a little higher. If by chance we break below 169, which I don't think is going to happen, but anything is possible, that could probably help out the VIX. So the 10-year note is TNX for anybody that's watching. TNX, you should be watching that consistently. So that's TNX and the VIX. Now, when that broke, here's the XPX. We're at the 50. All paths lead back to the 50. There was a trade there, and again, gave you some, and this is where we took the trade, right in there. MACDs gave you a fresh set of MACDs. Is breaking now. Where's it going to go? 46.29. It's above 40. Let's say 47, 46.30. If this sell-off continues, the MACD starts spreading its legs, and I'm going to show you if the MACD starts spreading its legs, right? Spreading, and I call it legs, it's lines, whatever you want to call it. All right. Then you're going to notice that this is probably going to go a little higher, right? So 46.40 might have a little pit stop, but it's definitely probably going to hit to that 45.81. Okay, so we're going to watch out for those moves. As far as the 15-minute time frame, again, you had the trade yesterday right there. And again, this is what I mean. When you line up with the 15-minute time frame, you line up with the hourlies on the 50, everything looks pretty good. And you had a fresh set of MACDs right there. So you had right there. You have a lot. You had 15, half an hour. You had a whole hour and a half. You had a lot of time to get into that trade when the MACD's going down. So that's how we trade. That's what you're going to learn moving forward in the class. I'm so excited. All right, so that's pretty easy. Now we're pretty far away on the 15. We're going to open up pretty low here. We're going to open up 46.30 just to let you know. At some moment, we're probably going to pull back to the 50-day moving average on the 15-minute time frame. And that might be another setup. So if you missed this trade, I wouldn't chase it. Let it set up properly. And again, somebody asked me yesterday, do I trade on the 5-minute time frame? Well, the question is yes. So if we're moving today, if this is a mover, then I'm still going to set up my trade the same way I set up here, but it's just going to be faster. And I'm either going to use a 3-minute or 5-minute, but I want to trade off the 50. All paths lead back to the 50, right? So that's if you want to, if you feel like you're missing out, put a structure on it. You're going to make less. Because you're probably going to get out much sooner than you would here and here. So just understand that. Okay, so let's see for the movers. Let's see what we got with the movers here. And again, now where we're heading to, guys, we're heading into today's playbook. So today's playbook, potential movers and levels. So get a pen and paper ready. I'm probably gonna go a little faster. If I see something that I need to explain, I'm probably gonna slow down. But right now it is, right now, let me see my computer. It just turns off. I'm watching 6 computers or 6 screens. And so get your pen and paper ready and write down the levels and key levels you want to watch moving forward. So again, right now it is 8:50. So let's go. All right. So what do we got? I told you about the XPX is working its way lower. At some moment, it's going to have to pull back to the 50. But can it get down to 40? It's going to stop at 4,600. That's pretty hard too. And then 4,581. I suspect we're probably going to continue selling off unless anything going to happen. But watch that. And here's a tell, guys. And when you see your hottest stocks like the chips were on fire yesterday. They did everything right, and they're taking all the good things down. And this is what I was telling you the other day. When they take the good things down, the companies are actually making money. That's a clue to tell you that, be careful with the meme stocks. Those stocks, I don't think this year is going to be about the meme stocks. I know you guys are going to hate on me for saying that, but I'm looking out for you guys. Companies that do not make money, they're not going to invest in those, and they're going to sell those things pretty hard. All right, so just letting you know that, just be careful. Nasdaq working his way lower. Again, Russell working his way lower. Google working his way lower. And this is what I mean about Google. And just to show you, yesterday in the trade, I got in right there. And again, wasn't acting right, couldn't break above that level, sold off. And when it's not acting right, what do? You get out of that trade because the legs were supposed to continue going higher, right? Google was a mover. It didn't move in my direction. And this is what I mean. So if I take it back to you, the reason why we look at this, I had a great analogy. It's about surfing waves, right? So you have to understand which side of the wave are you on the overall big wave, right? And then if you're trading a certain stock, you want to make sure that you're on the right side of the trade or the right side of the wave. So I thought we could go higher. I gave you both sides of the coin. And when that didn't work out, I took that loss. Yes, I have losses, guys. I took that loss, but we really quickly added it to another trade. Okay, so again, this is a net, and that's how you do net money management. Amazon working his way lower. Again, it has a lot of problems. Remember, Amazon, wage inflation, there's still the risk of the railroad strike. So again, are they going to, knowing that all that information is out there this weekend, are they going to, I don't know, are they going to bring the market up? So again, Amazon working his way lower. Tesla working his way lower, okay? IRSRG working his way lower. CMG working his way lower. So ultimately what you want to do, guys, since I'm looking here on the 15-minute time frame, and I'm trying to find a trade for today, but if you're a long-term trader, I'm going to show you at the end what to do or what to look for. Lam Research, again, this is a beauty. Working it, they're selling this one out. So this is a clue, guy. If Lam Research goes up 30 points, because these guys made money. If you see Lam Research go 30 points up, then more likely we probably could come back, right? Or they're buying the dips. I don't know if they are, but we don't know. It reminds you of 2001, guys. So just be frosty out there. Now, Lam Research probably needs to go back up to that 700, then see what happens there, or is it going to continue selling off? And this was a clue for as well if you're an option trader. When I was looking at Amazon at the 3,400, 3,450s, Amazon went up about 30 points, and those 3,400 calls didn't move, right? So if they didn't move, that's a clue to tell you that nobody's buying those calls. There's no liquidity up there, because if they were buying it, then the market maker would price those in. So he didn't think those were going to go up. He thought that the market was going to go down, and that was another clue. If you want to study the option premium, that's a way that you can also tell. Again, you're looking at premiums all day long, but if you're trading like I am, it's a very helpful tool. All right, so Goldman Sachs working his way lower, right? So again, if the default rates start increasing, right? Because once they start raising interest rates, yes, they can charge a little bit more, and they probably need, but the default rates are going to rise, right? So again, Netflix working its way lower, Roku working its way lower, Nvidia, the beauty, working its way lower, Mercado Libre lower, Apple lower. So Apple and Goldman are down. That's why the Goldman Sachs. Now Shopify working its way lower. So I'm not really getting anything that I want to trade here. Let me see on the up. No. ServiceNow, no. Nothing set up nicely for us today. Let me see here on the chips. So here are the chips. ASML, all right, holding. This thing would have gone. This thing would have gone, but they're taking everything down, guys. So AMAT, Broadcom, Roblex. Okay, so doesn't maybe ASML. It's holding that level. But again, if the market reacts, watch it at 47.46, 778 on top to get it going, 729 to the bottom. Avgo. So here's Avgo. Avgo gave all of his pre-market, Avgo's pretty interesting. I thought this was going to go, yes, and again, just whipsaw. But Avgo, if we go to the dailies, look at Avgo. Avgo had a beautiful swing. Pre-earnings, after earnings, ran up, right? Ran up to about 676 and then gave it all back. Gave back all his earnings move, right? Look, this was a pre-earnings move right there, and we're right there at 590, back to 597. Now, is it at the 50? Are they going to buy here, right? Now, this company did really well. Are they going to buy here? Now, this is a chip company. It is Broadcom. The thing about the chips is that you do have to pay attention to the tension between China and Taiwan, right? And that could happen 4-day weekend. We know China wants Taiwan. That could affect the chips. But ultimately, if we're looking at this is at the 50. Are they going to buy it here? Is this going to roll? I don't know. Maybe, possibly. If I look at this from this point of view, it probably needs to come back to the 50 at 610. But it's working its way lower. So let it base. Again, let it base. Don't chase. Let it set up. And Roblex working its way lower. So the other thing I wanted to show you was this. So let's go in here. And again, so if you want this setup, this is the daily, the hourlies, and the 15-minute time frame. And if I go to the chips, here, and I just real quickly, let's just glance, right? Snowflake taking it down at the 200-day moving average. Lucid, watch it, just broke the 50, and it looks it's probably going to work its way lower. We have Nvidia, just broke the 50, probably going to hit that 256, working its way lower, and then what happens there? AMD, again, just broke the 50. Is it going to stop there or working its way lower? It looks like it's probably going to maybe stay in that range of 124, 140. Qualcomm, holding strong. All right, holding strong, and I want to share this with you. So Qualcomm, watch it how it's ever at 50. There's a lot of headwinds at that 192, 193. This is dailies, guys, daily. So if it bounces here at that 180, bounces, the MACD's turn, might be a play for earnings. This has earnings coming up. This is probably why it's holding. You have Lam Research, has earnings, holding, right? So I don't know, a lot of headwinds at that 731. Are they going to take it up before earnings? Don't know. But watch it. It's holding that 50. ASML has earnings next week. All right. They sold it off. Don't know. Watch how this one reacts. I think that this is a reaction. These guys should do well if they echo the same thing Avgo did. This is why I was looking at this. But it's below the 50. So again, just watch it. INTU working his way lower. Roblex. Look at Roblex. So Roblex broke the 50, and this one, all paths lead to the 50 and goes back down. Roblex can probably go to 76, probably down to 69. Rivian working its way lower, guys. Yeah, working its way lower. AMAT holding steady because the chips are going to announce. So these are holding. Kering, these are all chips. Marvell just broke through. Watch it at 77, could break through. If it takes that out, it's going down to maybe 69, maybe 70. Avgo holding. MU, where we're at. All right, MU, holding. Watch it. All right, Intel holding strong, right? 56. So again, Intel, and Intel 55. 56 to get it better. If it takes out 56, there's going to be short covering up there. Don't have saying it's going to get there, but watch that level. KLAC holding strong. Okay. Oracle coming to the end. Watch it here for 89, maybe a play up to 92. Okay. What else we got? Snow. So we already did this. I wanted to cover Affirm, right? Because this company, I think that is probably going to go even lower. Look at Affirm. This is a beauty. Again, default rate. So when you look at it from this point of view, it's ugly, right? It broke the 200-day moving average. I don't think this company is going to survive. This is why I don't like this company. And again, if we look at it from the daily perspective, but this is what I mean is going to happen to the market, right? It's an ugly company. It's actually a crap company when you look at it. But this is going to happen. Oh, no, it's not that bad. It rips, right? Look at the rips. 118 to 140. Those are nice rips for this type of stock, 20 points. And then it rips what? From 140 to where? 95. It just ripped 45 points, right? And then look at the rip up. 95 to 129. So it's that. That's about 35. Yeah, 35 points rip higher. Oh, no. So this is, we play the rips, right? I just want to show you overall, because I don't want to confuse you. If you're looking at it from an investment point of view, do not invest in this company. I wouldn't recommend it. It's working its way lower. What you can also do, if you don't want to day trade, you can also buy puts long term. I wouldn't buy puts now. We like to puts at the 50. Okay, at the 50. So I just want to share that with you. The other one that we were looking at is Upstart, UPST, and Upstart. Same thing. Rips down, boom, up. And this is what I feel that is going to happen in the overall markets, XPX, NDX. So they're not going to say it's bad. It's just you're going to, and little do you know, we're going to have these rips up, rips up, rips up. And then you're going to find yourself at the bottom and you're going to be like, what, how did I end up here? And again, don't let it happen to you. Yeah, Doc, you're thinking the same thing. Yeah. No. And again, guys, I've been through this a lot. Been through it in 2008, 2001. I wasn't really, but I was studying the markets, but very similar action that I see that's happening at this moment of time. So again, but if you want to trade the rips, man, you can make money off of these things, right? Again, but just don't fall in love. We fall in love with profits. Okay, that's why I want to share that with you. And I'm gonna just go through this with the stocks that I went this. Let's cover the stocks that. Let me go here real quick. High volatile stocks. Let's go here. So this is where I cover. So if I just go real quick and look at the dailies, Land Research, we covered it. And Land Research is the baby. Shopify working his way lower. It got railroads. It got not wage inflation. This is a Canadian company. Definitely has supply chain issues. And, the CEO came out a while back and said, hey, we're going to charge less for people to sell on Shopify. That's a clue, guys. They're worried. So Shopify can probably go, whoa, wow, man. 1029, 1011, 883. Whoo, wow. Okay, we're definitely going to be looking at Shopify. Has some movement down there. Netflix, again, working his way lower. This looks like it's probably going to hit 507, 500. Ooh. That's not good. Roku. And this is something about Roku. Look at Roku. Roku's a crap company. I put it on my screen just to tell you because it rips, right? And this is exactly what I'm telling you. It rips down. But you got to understand where the levels are at. That's why, when you go to the class, I'm going to share with you the levels. And again, repetition of more learning. That's why I developed the class. I said, I just want to share it. So again, very different than creating triangles because you're going to be in the price action. You're going to be in the price action. You're not going to be waiting for a triangle to break out. Again, guys, this is the way you want to trade. It is going to be pair trading. So again, rips. Let's keep going. NVIDIA working its way lower. Melly. Look at Melly. Beautiful company. It moves. You don't have to wait for $1, $2, $3. Okay. Again, but it's basing right now. It's basing. Let's see what happens. It's forming a base. I like this action. So watch it here. And at 1367, if it can take that out because it's been hit pretty hard, watch it for maybe a reversal for a stock trade. 1366, there'll be a bear trap there. I don't think it's going to happen, but watch it. Apple, if it comes back to the 50, it's going to be good. Has earnings coming up. TTD working its way lower. Again, and the thought process behind this one is that 904, we're good. The thought process behind this one is that people are going to advertise less. Well, Goldman Sachs, we're right at that 50. They're going to announce earnings again. I think Citibank announced that. I don't know what the results. I'll dive into it this weekend, but I'm going to see what they echoed. Avgo right there. We got that. UPSD. We kind of covered that. Hubs working his way lower. Look at Hubs. So when you look at Hubs from this point of view, I wanted to share this with you because you see me from 15 point of view. And it's not that I love the company. I don't. I like the movements. Okay. I trade the movements. But if you're looking at it from a different point of view, if you use the 50-day moving average, buy puts long term, this system works. And MACD is going to tell you where to buy. Calls or puts? Puts. Right? Real simple. Keep it simple, guys. We overthink things too much. I had a conversation the other day with someone, and he showed me 20 indicators. I mean, I'm not that bright, guys, but I like simple things. I want simple. The market's not hard. It's just different. Keep it simple. Simple. Zoom, working his way lower. Kathy's buying. Okay, it's working his way lower. Guys, bookings. Somebody said bookings here. Who said bookings? Oh, you caught booking. Awesome. Caught booking before oh, good job, Win. Good job. Nice. All right. So bookings right here. Okay. So booking's a little bit better than the other stuff we're looking at, but it's coming to the end, right? So booking, let it pop, let it test. If a retest goes up, there might be a buy there long term. Okay. So again, there are some good things here that we need to find. But again, I just want to show you that I'm not crazy. Just trading. Look at now. Oh my God, look at now. Beautiful. Again, you could trade these things to just buy longer term puts if you don't want to trade it. That's what I mean. The class is not just for day trading. It just the day trades gives you the reps. Guys, you need the reps. We need to, it's like Jordan, right? He shot 100 or 1,000 baskets, 100, whatever basket. He shot a lot of baskets, right? You need to get the baskets in. We need to train our eyes to see the opportunities in the market. Very abundant. Coin. Working his way lower, basing. Affirm. Don't worry, guys. I'm getting to Bitcoin. All right. So you got it, right? Did you get the gist? If you got the gist, say, I got the gist. Write it in the comments. You got the gist. All right. So let's go into Bitcoin. All right. So obviously, I told you yesterday, and I'm going to dive into it. And again, depending on the time frame that you're in, guys, again, the VWAP is holding. Bitcoin is basing, right? So again, what I'm noticing with the bonds and they're raising the yields and you can buy Bitcoin and get about 10%. The banks know they're kind of, they need to compete. But your dollars are, you're losing buying power in your dollars, right? So that's evident. Inflation is pretty high. It doesn't include food and gas. And again, I'm not going to get into the whole, but you got to think simply. So, of course, they need to raise interest rates at some moment of time. At the same time, the debt that the United States own is going to be astronomical, right? Like, because now they're paying higher interest rates on the debt they own. So, not a good condition to be in, but it needs to happen. Like, if you were during the Greenspan, he's raising interest rate 3, 4, 5 times. I mean, look, Greenspan raised interest rates 19 times, right? During that time. So he just needs to do it, reveal the tape. It's not going to be pretty, but this is a flight to safety. I do see a divergence happening on Bitcoin. Okay. It doesn't mean that it's going to pop. Guys, I'm not saying that. I'm just saying that from what I'm noticing on the indicators I'm seeing, there is a divergence, meaning that there are buying. There's more buying here than there was before. Is it going to go higher? Don't know. We'll see. The 50 is coming back here. It's in the demand zone. I wrote this. I wrote this. It's there. If you're looking at a monthly, and I'm going to cover this with you, right? MACDs are there, but this is a 30-day candle. So far, it's holding, right? We got another 15, 16 more days to the end of the month. So be patient. On the weeklies, the MACDs turn and hold its VWAP. It is holding. So let's see. Just be patient. There'll be plenty of time. If you want to get in now, nibble, that's fine. But, it's up to you. For me, I want to see the break of the 50 because I want to ride the wave up. But get ready. We're getting close to find out what is going to happen. Okay. If Bitcoin goes up, MicroStrategy will go up too because they own a lot of Bitcoin. Pretty simple. Ethereum. Let's look at Ethereum. People keep asking, I don't know Ethereum. I'm not that well knowledgeable in the in this space, right? I just know price action. I know very little, not a lot. Would like to learn more, but just need to find time. It is right now in the demand zone. Okay, Now, I am seeing a divergence here as well, right? So, and what I mean by that, no, this is Bitcoin, sorry. All right. On Ethereum, is below the demand zone, has a lot of headwinds right at that 34.32. Okay. It looks like it's coming to the end. It's trying to base. Maybe if it can get above 34.34, which coincides with the 200-day moving average and the VWAP, which is 35.63. So they're probably going to come together. It looks like it's coming to the end, or is there going to be another sell-off? Ideally, what would be nice if it comes back down, bases, and then breaks through, and then these lines will be at that level, and then maybe it'll be time to add to it. So what I mean by don't chase, let it base, there's no need for you to get into it right now, because there is a possibility it could go lower right now, because I don't see an end here. Maybe it could go lower, but if it comes down and these go up, then that is a base and you'll get into it. And when you get into it, it is going to be a green position for you right off the bat, instead of you getting in and we don't know which way it's going to go. And if it goes down, then it turns red. And then you're going to be saying to yourself some silly things like dollar cost averaging, right? And then you're going to be like, no, I'm going to dollar cost average. Guys, dollar cost averaging is great. There's a science behind it. If you're a portfolio, if you're running like 10,000, 30,000 funds, yes. But when you have 10 shares, 100 shares, 1,000 shares, it's just silly. It's just you're afraid to admit that you were wrong in a trade, right? And then you're going to you don't really know technicals. I've been around this a lot. And you're basically don't want to admit that you're wrong, right? So either you're going to make money, either you can be right in your decision making and lose money, or you can make money. I mean, it's pretty simple. But anyway, let me see. All right, let me look at the size. Got it. All right. But I mean, again, to each his own. You can do whatever you want to do. But again, if you're running a lot, I prefer to ride waves. And what I mean by that is like, I want to let it base, don't chase. Let it do its thing. And then when it breaks out and we see the MACDs turning, right? And let me show you. I'm going to show you myself. When you see, let me see here. When you see the MACDs, those legs, right, or legs turn like, boom, that's the beginning of the wave, right? That wave is going to be beautiful, and it's going to be a beautiful wave. And then you're like, all right, cool. I'm on the right side of the trade. We always going to be on the right side of the trade. Like yesterday with the Google trade, I thought I was riding a nice wave. The wave was a little wave. I was like, I'm out. Simple. The minute you commit that you're wrong, you'll make money. Keep it simple. We want to be on the right side of the wave. All right, guys. I read wealth. Let me see. What do you got? I read wealth is made in downturns. Yes. I love bears. I'm a bear, right? I trade anything, guys, but I've studied bear markets. I love bear markets. I'm not afraid of them. They're faster, they're quicker, but if you can set up your trades properly, and that's why I did the XPX trade, just set them up properly, you're gonna do well, right? And you don't need to trade a lot. If you're buying puts, buy one contract. See how it works out. Buy two. Again, you have to understand your risk profile. Let me go in here. You're going to understand your risk profile. And again, the risk profile is going to be, and this is what we're going to cover, guys. This is what we're going to cover here. Like I said, it's pretty simple. I really put a lot of thought into this of what's going to make a trader the best trader out there. And, and what I realized, a lot of it has to do with market psychology. That's what Reminiscence of the Stock Market is a good read, and all those books I chose about mindset. You have to understand the market psychology, also your money management and your risk tolerance. And what I mean by that, and don't worry about what other people are making. It's just what is your personal goal. No two accounts are the same. You can't trade the same accounts the same way. Once you structure your trade, basically it's just, okay, what are your goals? What do you want to make? What's your risk profile? And that's what you need to cover to really do well in this. And that's the part that nobody really covers. There's books on money management, but again, they're kind of, in my humble opinion, they're very general, right? There's a very specific ways according to your goals that you can manage your accounts. And that's what I want to dive in, and that's what I want to share. And I don't have enough time to do that here, but I definitely want to share that with you guys. But there is the here's what you're going to learn. Here's a curriculum. So again, only $149, and we're going to do extremely, extremely well, especially if we come into these bear markets. All right, guys. But go in there, make sure to secure your spot. We're going to be there. We're going to start not this Sunday, next Sunday. We're going to start. So again, you have plenty of time, but secure your spot because there's going to be a doozer. I might do something this Sunday just as a bonus. I'll invite everyone. For that, just go on to this page because I do some posts here as well, and I'll probably set the invite here because then it's just a post for this page, and I'll keep it public so you can go in there and maybe we'll do a Zoom call and do a FaceTime with everyone and talk about the markets and for the weekly thing. So maybe I do that. Other than that, guys, any questions on what to do? So again, let the markets out. Where are the markets? Let's find out where the markets are at. The E-minis. Oh, not there. Let's go to our firm. All right. Let's see. E-minis. All right. E-minis. All right. So again, we're finding some. It's at that 46.07. Wow, it went there. We're at 46.16. That puts us at 46.26 now. So that's going to be 46.26. We're going to be there. There. Yeah. Wow. So again, we might pull up a little bit and then drop down. Get ready. There might be an opportunity if you're going to trade that way. Use the 3 minutes or 5 minutes and wait for the setups at the 50. All right, guys, go out there, go get it, and guys. Stay green. Give me a like, give me a follow. If you're anybody that's interested in the markets, please introduce them to this channel as well, because the more the merrier. Let's build it. Let's build a band of profit thieves together, right out there together, and let's get it. Let's get it. Let me see here. And again, if you haven't done it yet, go out there, like, subscribe, and stay green, guys. Thank you so much. God bless.